And welcome, it's Mary Ellen McGonagle with your Friday afternoon weekly Edge show for Friday, December 8th. Today, as always, we're going to take a look at where the markets closed for the week, and then beyond, we want to be very aware of any sector rotation, industry group outperformance that's taking place, and I'll share that with you. Also, some of the headline news that drove price action last week. And last up, viewer question of the week, and it's all about the move back into some of those Magnificent Seven names. So we're going to drill down there as well. First up on the news side, on Wednesday, we did see that private jobs, the report from ADP did show that there was a slowdown in new openings, and this was generally viewed as good news for the broader markets. It certainly helped push interest rates down. However, we didn't see a big response from the markets, and I'll share with you what's taking place and why that may be. Later in the week, today on Friday, October U.S. broader employment data did show that wage increases were still in place, and this has been a sticky point for the Federal Reserve relative to keeping those interest rates elevated. And then also 199,000 new jobs were added. Now, while we did see interest rates rise on that news, the broader markets were up for the day. So there does appear to be, at least this week, a disconnect between that economic inflation type data and the broader markets that will be put to the test next week, because we are going to get core CPI and PPI key inflation data next week. Also on Friday, consumer sentiment jumped, and that was another reason that we did see an uptick in those interest rates. However, again, the broader markets remaining steady despite those impactful news. This will make sense as we move forward. So from here, let's take a look. Where did the markets close for the week? And here we are with the daily price chart of the S&P 500. And as noted here, we've had a bit of a back and fill formation over the last 2 weeks as this sharp advance during most of the month of November is being consolidated. And I would argue that that backdrop is one of the primary reasons that we're not seeing sharp responses to the economic data that's in place. Quite simply, we've seen an already advance that would precede and really give a sense that any good news is built into the markets. And then some of the news that would normally be viewed as negative is not as impactful simply because interest rates remain at a low level despite going up. And I'll share that with you as we move forward. Today, we did see a nice base breakout out of this 2-week flat base. Good news there. Your momentum with that RSI and stochastics both in positive territory, keeping this uptrend in the S&P 500 very firmly in place. From here, we're going to take a look at those 11 underlying sectors within the S&P 500, a 2-month daily price chart view, and I've added a relative strength indicator, sorted these sectors in descending order. You want to be aware of where that relative outperformance is taking place, and then, of course, ideally, why, so that you can participate. So up here at the forefront, industrials, and this is interesting because the group traded up only 0.2% in line with the S&P 500, but noted here is the fact that it does have a nice confirmed uptrend in place with some underlying areas, particularly transports, on the move higher. Financials up here at the forefront, another group that was mostly in line with the broader markets, and we can see, similar to other areas we're going to be taking a look at, it was generally a period of consolidation following a very sharp advance. As we move through, I'll share with you one of the stronger areas in the financial grouping, but it certainly remains up here at the forefront. Consumer discretionary top performer last week, up 1.2%, helped by a rally in Tesla, but also other underlying areas that we'll review within this discretionary area that's keeping it in a nice confirmed uptrend. Other sectors of note here this week is the fact that technology seemingly came back into play, up 0.6% in line with the NASDAQ. But let's take a look at this pullback that took place mostly last week, finding support at this upward trending 21-day simple moving average. And in essence, the pullback helped pull this RSI out of an overbought position, which is good news, allowing this XLK tech sector to potentially experience more by way of an uptrend. Now, as we move through, you of course do want to be aware of those weaker areas, and we can take a quick look at energy, which is continuing to deteriorate, down another 3.3%. Energy oil prices down again this week at about that 75 per barrel pricing for Brent. And then dynamically, there are other reasons that this particular group is not only in a downtrend, but continuing to exhibit weakness. One area that did recover quite nicely this week, but is still down in that lower quartile because of this 2-week pullback, is communication services stocks. And this is going to be primarily internet-related names. Very healthy recovery from that pullback back above these shorter-term moving averages. And as we move through those Magnificent Seven, I'll share with you key names that did help this group and sector regain its uptrend. So from here, let's go ahead beyond these sectors and take a look at some key underlying industry groups that can be really helpful in helping you stay on top again of where that strength relative to the weakness is. And first up, we're going to take a look at that yield on the 10-year, because that's certainly been and continues to be a driver of price action within the markets. So on that 10-year yield, we did get up close to that 5% level at the end of October, but we've seen a nice orderly decline subsequent to that as inflation and other data is showing a cooling off that would allow the Fed to potentially pause their rate hike campaign. Now, today's data, I mentioned we did see an uptick in interest rates due to that. However, we did land here at that 4.2% level. So despite a gain this week, we are still at relatively low areas that have allowed for rallies back here, certainly in this June to August period. And so not concerning just yet one day's uptick on the yield. So from here, we can take a look at some of those areas that fare well in a declining rate environment. First up is home builders, XHB. We had this nice downtrend reversal take place in November. A lot of this stemming from not only interest rates declining, but also strong earnings reports from underlying new home builders, and confirmed uptrend taking place as it continues to trade higher. Also benefiting from declining rates has been and continues to be regional and other bank stocks. This is KRE, the regional banking ETF, and you can see that we've had this high tight flag formation with a breakout and nice uptrending continuation moves into these bank names. Also of note is the software grouping IGV. Now, it was down 1% this week, but net, given this big move in November, we are still in a period of consolidation. We're going to keep an eye on that MACD, because if we do get that black line down through the red, certainly it wouldn't be as compelling to participate in this uptrend. Quite simply, it would not be a sell signal. More often, it can just indicate that the group is due a period of consolidation before potentially setting up again. Retail stocks were down. This is XRT for the week. However, again, it is a period of consolidation. It was a very orderly pullback that found buying as the week progressed, and then your momentum indicators remain in positive territory. So good news there, despite news today that consumer sentiment did in fact rise. That is good news for this sector as consumers continue to spend going into the holiday season. Other areas of note was a late week move back into semiconductor stocks, which had pulled back to this 21-day simple moving average. However, your RSI did remain in positive territory. A lot of this move having to do with AMD. If you haven't seen that, I can certainly share a chart. They did unveil new AI-focused products this week that were very constructive for the company's outlook and in turn pushed AMD back into a nice uptrend. This is one of the names on my MEM Edge report. I'm going to get into much more detail relative to the chart and what to be on the lookout for with the newfound growth prospects for the company. Moving through here, one last area that I did want to share with you was the continued move into biotechnology stocks. Not quite ready for prime time. The group overall did outperform this week, however, with a 1% gain. Among other dynamics within this group is we are seeing these larger cap pharmaceutical companies purchase some of these more advanced biotech firms, and speculation is ripe as far as the next candidate that could be bought out, but also they're coming out with good clinical trials and other reasons for this group to continue to potentially advance. This also is a very risky area, so that when we see an uptrend shape up, it is highlighting investor confidence in the broader markets as well. From here, let's go ahead and take a look at those mega cap, formerly known as FANG stocks, the Magnificent Seven. So again, a 2-month daily price chart view with that RSI added. I'm going to go ahead and update this, and essentially your relatively stronger names are up here at the forefront. It doesn't mean they've been on the move higher. It's really taking into account advances going into this week as well. First up is Apple, and it did have a very constructive week in the sense that it broke out of this 1.5 week base where the pricing here on Wednesday, it moved above this prior high. Nice high volume, and we do still have constructive RSI and MACD characteristics. From here, you can go ahead and add a 5-day simple moving average. That's this blue line, so that when these faster moving growth names get moving, you can use that as a key area, not only of support, but pullbacks to that 5-day become ideal buy points. Moving through, taking a look next up here. Next up here is Amazon. Although it traded in line with the markets, it's been holding in relatively well with the flat backfill formation over the last 3 weeks. Its momentum with the RSI and MACD remaining in positive territory. It will take some sort of by way of good news to help break this out above this flat base. But the movement where it is remaining in a tight trading range is quite constructive for a potential another leg up. Microsoft last week recovering from a pullback. The stock was flat for the week, but relative to last week's price performance, we can see that it is generally in an upward trending flat base formation with this RSI, that relative strength indicator, trending upward. A move back above this green 10-day simple moving average would be very bullish for a nice continuation rally. Talked about the internet-related names that suffered this past week, but we can see with, for instance, Meta Platforms, a heavyweight name, regaining its 10 and 21-day simple moving average, also regaining its momentum with that RSI turning positive. Good news there. We want to see these leadership names regain their leadership status. Alphabet, another heavyweight in communication services, also reversed its downtrend, but not quite as healthy looking. We can see it pulled back after weaker than expected earnings, and then its recent pullback this month has been much higher, certainly relative to its peer mega cap names. Last up here, we can take a look at Tesla, and Tesla really has been in a go-nowhere environment, bouncing around despite pretty impactful news. But of note is the fact that throughout this period, your RSI, that momentum, has remained up here in positive territory. That is good news, so that in the event that there is really impactful news and the markets really perceive it as constructive, we could easily see this stock trade higher. That's relative to this period in September when that RSI got down below 50 and we broke below that 50-day simple moving average. We had a little bit of a pullback, but more of a pullback in late October. So keep your eye on that RSI metric and the price of Tesla relative to these moving averages. That's it for this week, everyone. I hope you have a fantastic weekend. If there are any questions that you'd like covered for next week, go ahead and put them in the chat box below. And also, if you like what you've seen, hit that like button. I'll look for you again here next Friday.